please spend your money when you're in retirement.
If you've spent any time on financial TikTok or YouTube, you've probably heard the same advice on repeat. But not all advice applies to everyone. This episode won't be talking about the latest financial hacking trends. Instead, we're talking about something simpler and often overlooked, which are health savings accounts, better known as HSAs. Today, we're breaking down this misunderstanding, the underutilized but powerful opportunity to use an HSA. Hello and welcome to Money on Your Mind from Edelman Financial Engines. I'm Michael Liersch, a behavioral scientist, financial planner, and your chief planning officer at EFE. Thanks for joining us for a conversation about how people are feeling about money, what they're wrestling with, and how financial planning can help you straighten things out. Christy is joining us from EFE as our financial planner. And Christy Martinich is an excellent planner that I've had time to chat with, share stories about how much she loves helping out clients. So Christy, welcome to Money on Your Mind. Thanks for joining us.
Thank you, Michael.
So Christy, in the spirit of getting a little personal here, I'd love you to tell the audience a little bit about why you like being a financial planner, how long you've been a financial planner. I know it's, for quite some time now, and ultimately how you landed into this space of helping people achieve their financial goals.
Yeah, so I have been a financial planner for 20 years now. I started, when I first started, it was a different experience than it is now. But what kept me going is meeting with clients and getting to know them on a very deep level. And I think that's something that EFE does really well. We spend a lot of time getting to know our clients in that very first meeting. It's not just an hour. It's really breaking down everything and finding out where people's strengths and weaknesses are. And going through that entire process, you create a circle of trust that really kind of deepens any relationship. So I feel like my whole world is my friends and my family and my clients. That's what my entire life revolves around.
Well, with that in mind, we have a bit of a hot topic here, especially given the fact that in this environment with inflation and energy prices and everything going on, people need to make the most of their money. I know you want to talk a bit about health savings accounts, HSAs, but before we get into that, can you just give us a little bit about what you're hearing from your clients today and some of the most popular strategies you're hearing about making the most of their money before we get to the HSAs specifically?
I think the real hot topic is, and very trending right now, is the Roth conversion. I know people have talked about it over and over again, but it's something that people bring up a lot. And I think some advisors focus mainly on all of those conversions. It's so trendy. And just because you can do it doesn't mean you should do it all of the time. So you really need to think about the big picture before you start talking about Roth conversions. But that's the trendiest thing that I see right now.
Well, it has that whole tax optimization,
Yes.
Paying now versus paying
now,
later.
Paying later.
Yeah.
And sometimes it's just as simple as that. But you might not even need to do the Roth conversion. It just depends on how much are in your qualified accounts that's going to maybe eventually give you this tax torpedo that people want Roth conversions to avoid. So it just has to make sense. You don't do it just to do it.
So it's a perfect bridge into something maybe a little less trendy, but still all about taxes and helping you make the most of your money in the context of healthcare. So tell us a little bit about what you're hearing or not even hearing with respect to health savings accounts and HSAs and how people should be thinking about them.
Yeah, I think one of my goals this year is to really make sure I know each one of my working clients if they are using it. And I think for financial planners, a lot of times that account isn't under your view. So you can't, and it's out of sight, it's out of your mind. So proactively asking, are you in a high deductible plan at work? And do you have access to an HSA? So an HSA is one of the best types of accounts you can get in America. It's better than the Roth IRA. It is pre-tax going in. It does grow tax deferred, and it's tax-free coming out as long as it's spent on medical
So
expenses.
like the trifecta of tax advantages
It's
here.
the best account you can get, and people really overlook it. They think of it as more of a checking account than they do an investment account. So they'll just pay for their current medical expenses, and that's fine, but I think they're really missing the bigger picture of what an HSA can do.
So do you think that's
So
because it's paired with the high deductible plan that they're using it that
yeah,
way?
yeah.
Okay.
A lot of time employers will contribute to it, and so they think that it's just to pay for current medical expenses. But if you have that triple tax power to it, and if you can, pay as much out of pocket for your medical expenses today, you can always put that receipt in a folder on your computer. And 10 years from now, when now you have contributed all these years and you have this account that's grown with the market, you can still go back and use that receipt and get paid back for it. So that's the wisest thing that you can do, is not spend it today. I know it's got to be hard and I'm empathetic to some people that need that cash flow, but I just want to make sure people are invested. A lot of times they'll even use the HSA, and then I find out a couple years later it's just been in cash. They haven't invested that balance. So
Oh.
it's like I said, it's out of sight, it's out of mind. So it's hard to keep up with if you're not asking the right questions.
So I do wonder, Christy, if a little bit about the use of it. It's since it is often tied to the high deductible plan, meaning there's a lot of out of pocket expenses relative to other types of plans. There's also another element to it, which is reminding me of like a 529, an educational
Mhm. Mhm.
account where people say, oh, I'm going to actually put the money in there, invest it so it grows by college time. I think in this case, a lot of health expenses, to your point, are not only ongoing, but thinking about the time you might need it 10 to 20 or 30 years from now is a bit harder to imagine than like sending a child or a grandchild to college. Do
Right.
you think that's part of it too?
I think so. And I think people also miss the mark on what qualifies as medical expenses.
So tell us
Uh,
about it. Yeah.
so I know people, as they are in retirement, I feel like their dental bills go up quite a bit. So it will cover all of those dental bills. It will cover those vision, the glasses, the contacts, LASIK. It covers a lot more. All these over-the-counter medications. It covers therapy, mental health. So all of your therapy sessions you can use this for. So I think it's broader than people realize.
So, Christy, before we leave the topic of HSAs, and if our audience is kind of interested here, oh, like this triple tax win, money in, growing, and then money out, all tax advantaged. Uh, I don't need to necessarily use it immediately like a checking account. I can let it, sit there for when I need it for all these broad health use cases that you've highlighted. So give us
Right.
some general, though, like guiding principles for kind of the restrictions around an HSA or the opportunities maybe an employer provides
Right.
so that people can kind of ask the right questions about it.
Right. Yeah. So I think people sometimes get confused with the FSA versus the HSA. So the flexible spending account, and that's something that you have to use in that current year. So it's got to be all used up. I think you have until the first quarter of the next year.
As long
But
as the employer supports that.
as long
Yes,
as the
totally.
employer supports that, um, and the HSA is yours. So you own this account. These are your investments. So if you leave employers, if you change employers, you get to take that with you.
That's
So
huge.
maximizing that benefit is huge. You have a different cap versus if you're individual or if you are married with children, you have a different cap. You get an extra bump when you're 55 to be able to contribute a bit more,
Oh, like the catch-up contribution in a
like the catch-up
401k kind of. Yeah,
contribution.
I
Yeah,
see.
and that one's at 55. So there's varying amounts, but it is such, if you have an amount of money to invest in your employer plans, you always want to contribute to your 401k up to the match. But remember, this is a triple tax benefit. So max out that HSA as much as you can and invest it for the long term. That is going to give you the biggest bang for your buck.
I love that, Christy. So first, determine whether you have access to an HSA. Think of all the ways that your employer may support it, with a match or, kind of other opportunities within that framework. And then, Christy, it just sounds like ultimately you want to make sure it's right for you, but there's so many advantages and opportunities. It does kind of match up a bit with, the 401k rules,
Right.
use it, especially up to the employer match, if at all possible. It sounds like this is in the same domain. Does that sound right, Christy, the
It's in the
HSA?
same domain, but it has that tax. So you have your 401k that's traditionally pre-tax, but it's fully taxable when you come out, when you pull it out. This one is not. This one's tax-free. All you have to do is spend it on your Tylenol and make sure that they're using it in the right way.
Well, you heard it here. Thank you, Christy, for sharing with us all the mystique and then unpacking all of the mystique around an HSA. It's really not that mysterious after all. And I agree with you. People do confuse it with the FSA. We're actually just talking about that. A couple hours ago, I was in a conversation about how FSAs and HSAs get confused, and maybe that's why HSAs are underutilized. So,
Right.
super helpful. So, with that in mind, I want to ask you two questions that we always ask every planner that joins the podcast, so that clients and non-clients, so all our audience can listen to what you have to say. What's one of the biggest mistakes you're seeing clients make right now today?
So I see clients that haven't updated their expenses in a couple of years using
Okay.
some stale numbers. So, you create a financial plan and you think you spend a certain amount a month, and then 5 years later, is that amount still the same? Or are you using stale numbers? Because the last thing that you want to do is get to the point where you want to stop working and you just can't keep up with the lifestyle that you want. So making sure that your numbers are current, that you are keeping up with the savings needed to accomplish those goals. I think people sometimes use too stale of numbers these
So,
days.
so give one example of maybe a line item, like in that spreadsheet or the expenses that people are using, that's oftentimes going stale in 3 to 5 years. What's like one line? Is it travel? Is it, the presents I'm spending all my money on my kids and grandkids
Right.
for? Like, what
I
is it?
mean, everything's just more expensive. It is.
Okay.
It's just more expensive now. Um, I think the one thing that I have to help my clients understand is the Grubhub and the Uber Eats. It's so expensive, and people are probably doing it a little more than they really should. So that's one that's easy to cut out if you're looking to match your savings rate with your spending rate. That's the one that I feel like has gotten a little bit out of control.
The final question we always like to ask on the podcast is, what's one thing that everyone should be doing right now with their money?
Yeah, I think in this, going back to expenses in this subscription universe that we have entered into ourselves, is really every maybe 6 months sit down with your partner or sit down with your credit card bill and highlight everything that you intended to come out that month. Because a lot of times these subscriptions that you signed up for a year ago are ongoing and they just keep renewing and you don't realize that. So just make a little bit of an effort to keep up with your expenses and make sure you know what's going out the door.
That's really great advice, Christy. And I will say, my wife, my daughter, and I are starting to do spring cleaning, and we're including that in our spring cleaning. All the, to your point, the
That's
services,
great.
apps, everything that it's almost impossible to keep it all together when it's, diffuse across partners and
Yeah.
spouses and family
Yeah.
members. So we're just collecting all the information, and we realize we do actually have some dupes, Christy. So we're getting
Yes.
that all organized, which is kind
Yeah.
of your point, right?
My husband and I were both paying for Paramount Plus. Why were we doing that? So it sneaks up on you.
Netflix doing it
Mhm.
too. So yes, yes. Well, thank you so much, Christy. Any last words for our listeners?
I would love to tell my clients that have achieved retirement and are in this limbo zone of being scared to spend their money. So, another task of mine this year is to really make people feel at ease spending their money. Please spend your money. Spend your money, enjoy it.
Well, Christy, those are inspiring and encouraging words. You've done the hard work, you've created the plan. Really enjoy your life. Money is just a tool
Yeah.
at the end of the day,
Yes.
right?
A tool to create memories.
Well, thank you, Christy, for everything. And for our listeners, that's everything we have for you today. This has been Money on Your Mind. A big thanks to financial planner Christy Martinich for joining me. And we'll be back next Wednesday with a new episode. Subscribe to the show on Spotify, Apple Podcasts, or YouTube so you don't miss it. And we'd appreciate it if you left us a rating too. I'm Michael Liersch from Edelman Financial Engines. Talk to you next time.